Welcome back, folks. Greg Silberman, your African CPA. The picture in the back of me is Johannesburg, South Africa, where I grew up. That's called the Ponte building back there. And if you can't see, but to the right is Ellis Park, the wonderful rugby stadium in Johannesburg. Another episode of CPA's Five Tax Loopholes You Should Use Before It's Too Late. A bit of an alarmist title, but nonetheless, good tax loopholes. So come join me. Let's figure out how to save some taxes. Okay, number four. This one is quite specific to year end, but hold a board meeting. Okay, a board meeting is a meeting where you get together with your mentors, your directors, your board, essentially. If you don't have a board, create a board using mentors or your family. Most importantly, you can go away on a trip for 2 days. And for those 2 days, you can speak about the business, how to do things better or worse, or post-mortems or whatever you want. All of those expenses pretty much are deductible as a year-end board meeting. Important to do, minute the meeting, have documentation supporting the fact that you had the meeting. Use the meeting to review financials, strategies, and any new resolutions. And of course, the minutes and everything help you strengthen governance and audit readiness having the board meeting. So you can have a board meeting and you can deduct the cost, even if it's a Thanksgiving board meeting, up to 2 days of it is deductible. Okay, tax loophole number 5, HSA account contributions, health spending account contributions. If you have what's known as a high deductible health plan, HDHP, that's a plan that you can typically get through the Obamacare marketplace, defined as $3,200 deductible for a family or greater for the year. You can take advantage of a health spending account. Now, a health spending account is essentially a top-up plan where you can put money in tax-free. It can compound tax-free, and it can be taken out and used for qualified medical expenses. The limit that you can contribute is $8,300 in 2024, tax-free. That has to be made by January 15th of the following year. And of course, you can just let that money compound if you don't need it, or you can just let it compound for a long time, or you can use it for medical expenses. So a great loophole. You should be taking advantage of the HSA account if you have a high deductible health plan. Okay, folks, so that's it. That is the 5 tax loopholes, count them, 5 loopholes. This is kind of the conclusion slash disclaimer part of it. Proactively plan and leverage tax strategies. You can make use of all of these strategies, and you should be thinking about them in January, not in December. Stay compliant with IRS regulations. So all these loopholes require some kind of regulation, minutes, documentation, etc. Consult a tax professional for professional advice. Yes, you can ask me. And act now for the benefit of year-end deadlines. And if you're watching this after 12/31, you can certainly get hold of us and we can start taking and putting these into place for tax year 2025. Thanks for joining. Greg Silverman out. Okay, folks. Well, I hope you enjoyed that 5 tax loopholes you should use before it's too late. Of course, it's never too late. Income tax is with us forever and ever. Although some people are saying income tax is going to be done away with. I highly doubt that, given the level of Social Security and Medicare that we have to fund. But that Elon Musk, he is a genius. So stay with us. Give me a call if you need any help, any personal help. And out for now, Greg Silverman.